Continuing with the discussion on what if I can't make my payments. Now, we talked about foreclosure, and I will tell you that's certainly not something we want to happen there. But in some cases that we need to talk about, you may be allowed to sell your house under what we call a short sale. And the reason this is even an option, is it possible that your home has it's just depreciated in value, and to the point where you can't sell it because you couldn't sell it for enough to pay off what you currently owe. Your house is not even worth what you owe on it. And I will tell you that happens a lot, especially with those that get that 100% financing. I'm telling you, if the home depreciates at all, and within a couple or few years of buying it, you could find yourself upside down, right? When I say upside down, meaning you owe more than the property is even worth. And in a case like that, you couldn't sell it under normal circumstances. Well, there is a possibility that you could do what we call a short sale in cases that I just described, when you're basically upside down and your house is just not worth how much or as much as you still owe on it. Okay. Obviously, all of this has to be approved through the lender, and they will evaluate these things. But if you can show that you have a hardship now, and this is going to be critical, you got to have a hardship. You can't just decide, I'd rather buy another house, but the house I live in, I can't sell it because I owe more than it's worth. You're going to be stuck with that. Okay, that was just that's on you. Okay, that's not on the lender. That's not their fault. It's on you. So, but if you can show a hardship where you've been laid off, you lost your job, and you just cannot make your payments, and you're going to have to show that, prove that to the lender. Then they may talk to you about a short sale, because the last thing the lender wants is a foreclosure. Foreclosure typically is going to be much more expensive. And if you think about it, even if the lender did foreclose, what's the lender going to do with the property? They're going to sell it. Well, I will tell you, the lender typically is not going to be able to sell it for as much as the homeowner could sell it for. So if the homeowner can't sell it for enough to pay off the loan, then the lender certainly is not going to do that. So that's why they will consider a short sale in a hardship situation. Okay, so basically, assuming the lender will agree to it, then they will tell you, go ahead and put the house on the market and to sell it. But when you do this, it has to be marketed as a short sale, meaning that sale is going to require what we call third-party approval. Okay. So when you market this in the MLS or anywhere you're marketing this property for sale, that buyer better know that this sale is in fact a short sale, which means it's not solely up to the seller to agree on the sales price. The lender is going to have to approve the contract of sale before you can move forward. So that's what they call it, requires third-party approval. All right. So in essence, if you do get an offer on the house, the seller is just going to pretty much accept whatever offer they get because they know it has to go to the lender. Now the lender has to approve it. If they say no, this is just way too not near enough money, then they'll just reject the offer and you can't do it. But if you don't put in that contract that this sale is contingent on third-party approval and you accept that buyer's offer and now the lender is not agreeing to it, Y'all, you're going to be in default with that contract. So, y'all, in the contract to sale, it must state this is a short sale and it will require third-party approval. So the buyer needs to know it's not just up to the seller approving it. It all, excuse me, it also has to be approved by the lender. Okay. Now, that sort of gives you a little insight, I hope, on what a short sale would be. Now, as I said a minute ago, it does require proof of a seller's financial hardship, where for whatever reason you cannot make your payments. Just because you don't want to, or you just want to get out of that house, that's not going to cut it. You got to be able to prove hardship, financial hardship. Again, the lender will have to approve the sale. The lender is considered the third party, and the contract to sale must state that the acceptance by the seller is contingent on third party approval. Typically when you have contingency in a contract to sale, it's usually the buyer has contingencies where they got to sell another house or whatever. But with a short sale, the seller is going to have a contingency, and you better not leave that out of the contract. But at least by going through the short sale process, it does avoid foreclosure. So at least we're not getting in all the legal fees and stuff that it would normally, for a foreclosure would normally consist of. Now, when you do this, obviously it's going to have an impact on your credit. The good news is it will not have near the severe impact on your credit than if you had it foreclosed on. So, this is why it's so important. If you can't make your payments, work with the lender, get the house sold, whatever it's going to take to make the lender happy, because you want to have as minimal impact on your credit as you can. If you have a foreclosure, that could be on your credit for 7 years or more. That means you're not buying a house for that, at least that amount of time. But if it's a short sale, again, it will impact your credit, but maybe only for 2 or 3 years. So it's not going to be nearly as severe as a foreclosure. But then again, when it comes to that sales process, just make sure that it is the contract is contingent on third party approval. The buyer needs to be aware of this, not only because they need to know the lender has to approve it, but I'm just telling you, a short sale does not mean it sells quickly. Okay, they call it a short sale because the lender's agreeing to let you sell the property short of what's actually owed on it. But to suggest that this is a quick process, no, this could take months before it finally closed. This could be a very lengthy process. So both parties need to understand this going in, and you better have a lot of patience, all I can tell you. But anyway, that's kind of how the short sale works. Now, let me just say this too. Let's say you owe $200,000, but you could only sell the house for $150,000. So obviously there's a $50,000 difference there. The lender approved it, right? They agreed to it. But what happens with this shortage of $50,000? Well, depends on how good a negotiator you are, how good your agent is at negotiating these short sales. Potentially, you could get the seller to get the lender to just agree to wash it off. Just drop it, let it go. Not make the homeowner responsible for it. I've seen that happen quite a bit in the past. However, the lender might say, no, we can't just forget about it. But what the lender might do is, they'll basically write off that $50,000 as a loss, for tax purposes. And, the way they would do that is they're going to issue basically a 1099, which is income. That's how you report income to the seller. So basically, the seller's going to wind up with a $50,000 1099 at the end of the year when they go to do their taxes, and the IRS is going to look at that as income. You earned $50,000, you now owe taxes on that. And I hear people get all upset and whining, well, that's just not fair, I shouldn't have to pay taxes on it. Okay, well, let me ask you this. Would you rather pay the $50,000 you owe, or would you rather just pay the taxes on the $50,000? I think I would take the lesser amount and just pay the taxes on it and be happy in a situation like that. But anyway, I think that's pretty much all you need to understand for now, and certainly for test purposes concerning a short sale. A word of warning from Frankie: stay away from short sales unless you have extensive training. A lot of training with short sales. This was just a quick overview, but I'm telling you, these short sales can be very extensive, lot of paperwork involved, very time consuming, and you better know what you're doing, or you're going to get yourself and your client potentially in a mess. I'm telling you, if the seller's in a situation where they require a short sale, the last thing they need at that time is an incompetent agent that don't know what they're doing to create and compound the problems for the seller. I'm telling you, that will happen. So if you don't take some courses, extensive training in short sales, stay away from it. Do not get involved with it. That would be my advice to you.